The market's up again today, but we have lost a bit of yesterday's strong momentum following the release of those manufacturing numbers across the globe.
Yes, I mean the market is firm, and it's been firm over the last few days. I think there was a lot of short and negativity in the market over the last 2 weeks, along with the problems with the Greek debt scenario. But the PMI numbers overall looking relatively firm. One or two of the PMI numbers were slightly weaker, but they're still quite strongly above the 50-point index level, still showing growth. So there's vulnerability to manufacturing and growth, but we're still on the growth path.
Of course, our South African numbers surprising to the upside, coming in above 60, so quite a sharp improvement from the first 53.6 that we saw in January.
Yes, definitely. I think that the government spend that's coming through is really filtering through into the manufacturing sector. Obviously, we need to get a lot of employment coming through there, and I think it's a very positive number for us, and hopefully that index above 60 also starts to create jobs for the South African market.
Of course, interestingly, the UK and PMI yesterday, sharpest rise in 15 years, and of course growth also coming through in the employment components of those data. So good news for the UK economy, and of course we'd like to see that elsewhere, wouldn't we?
Yes, we saw those numbers, a 2% increase in employment in the manufacturing sector, and that's a very positive sign. The underlying fundamentals in the market have been looking better, but the one weakness has been employment. We see in the States that employment has eased, but it hasn't started to create jobs yet. So that is the first indicator so far that we've seen that some employment has been created, and hopefully that's going to be filtering around, and we'll see those type of numbers come through from the States with the non-farm payrolls coming out later this week.
So those figures on Friday really quite important for the future direction of the markets.
Yes, I think so. Those non-farm payrolls, everybody's watching those very closely. I think on Thursday we've also got the jobless claims number to see how many people are claiming unemployment benefits in the States. So those two numbers are very important. And if we just see a really good improvement in the non-farm payrolls, very positive for the market. So it's a number that we're definitely looking at.
Of course, as you pointed out, all of the Western countries now really above that 50 break-even level on the PMI front. China also above 50. It retraced slightly, but still firmly above 50. I mean, do you think this is going to put pressure on the bears who were expecting a double-dip recession?
I definitely think so. The underlying point, as we said a little bit earlier, is unemployment, and there is a little bit of vulnerability we see with the Greek debt problem. I think if the sovereign debt issues that are in Europe can be kept at bay, I think a double dip is going to look slightly unlikely for all those bears.
Of course, we've had a number of results coming out again this morning. We had Metrorex and Merafi. Results yesterday from Bidvest, and of course it did say that it has quite a lot of money to spend on acquisitions at this point. Do you think that Bidvest is going to go out there looking for companies to buy?
Well, they said they've got about 10 million rand to spend, and I definitely think that they will. Part of their business plan obviously is to have size, very high volume, low margin type of business, and I think they'll look for companies that are under pressure during this very depressed recession. I think with the very strong rand against the euro currently and against the pound, an acquisition into Europe and on the food side is something definitely that Bidvest could look at, and acquisition into the UK, especially with a weak pound relative to the rand, is something that Bidvest will be looking at.
Results out this morning from Merafi. It's really suffered from poor ferrochrome prices towards the end of last year, and of course we know those ferrochrome prices haven't really recovered to this point.
Yes, a little bit. We've seen some recovery in the iron ore price, and in some copper we've seen very strong recovery in the copper price, and we can see that in the Metrorex number. The ferrochrome prices have increased slightly, but not to the same point. They've also got obviously problems with the Eskom increasing of tariffs there of 25%. They run very large furnaces for that ferrochrome business, and it's a very big cost input to them. So still under a little bit of pressure, starting to look slightly better, but the market's still a little bit undecided whether they should enter that market for Merafi. On the other hand, Metrorex, the copper price looking very strong. With the earthquake in Chile, we also see copper prices spiking, and China's still stockpiling a little bit there, so looking much better for the copper side than the ferrochrome.
Of course, something that we will be watching for in the markets tomorrow is ArcelorMittal. It's due to start trading again. It's stopped trading, or suspended trading rather, on Friday at 116 Rand 67. What sort of indication are you getting on where the share is going to open tomorrow when trading resumes?
A day or two ago we looked at around the bids in the market at around the 103, 104 level. I see today on the screens that we've seen bids coming in there at about 107. It's difficult to tell though. They should give us some type of indication of, is that contract going to continue and at what level? Is it going to be at market related prices? If it's going to be at market related prices, I think 100 Rand or below is somewhere where it could start. Anywhere in between there, probably around 103, 104 Rand is where the market looks like it's going to trade.
Rob, in the meantime, can we
which
expect...
is about 10% below where it is now.
In the meantime, can we expect the volatility we've seen on the markets over the past couple of weeks to continue until we get more evidence of a recovery?
Yes, I think the recovery is looking slightly better. If we take a look at the PMI numbers, 3, 4, 5 months of recovery we've seen all in a row, but it's very tentative, and the sovereign debt issue is a problem. So I think that will keep a volatility in the market. And when we say volatility, overall the band is not very wide, but we trade in a flat band and up and down quite aggressively within that band. So the volatility not too high, but the trading range is a lot of volatility within that trading range, and I think that will continue for the next few months.